What's going on, YouTube? It is your boy Go to Trades, and I'm back with another video analysis, weekly analysis for the stock market ahead, so that you and I are both prepared for what's about to happen in the stock market ahead. And listen, let me tell you guys, it was a very interesting week ahead. I'm not gonna lie, last week was a very interesting week. It's kind of funny because I rewatched my video last weekend and everything that I said last weekend, and we got some decent views and reaction and engagement on the video. So let's just keep up the momentum so that this week and next week we obviously keep more people engaged and ready for the stock market. But last week, bro, I'm not gonna lie, that video was top tier. Literally everything I said in the video happened. Everything, right? So I'm not saying like I'm like this prediction monster or whatever. I'm not saying like I'm a guru or a fortune teller, but it just goes to show when you have a strategic game plan for the week ahead that you guys are, obviously you're going to make strides in the market. And, I think we did. But anyways, let's just keep up the momentum. Now, obviously how we start off these videos, we always start off with the stock market heat map here. And as we can see, man, a lot of red, whole lot of red. Shout out to Playboy Cardi. Listen, I do think that we do have some broad-based selling in the market. Yeah, we do. But for the most part, I can also see there's a lot of rotation, right? So we can see that electronic technologies, technology services, finances, these commercial services, consumer non-durables, consumer services, all these got a big hit last week. It got a big hit. We see a lot of red in the market, but we can also see these pockets of green, right? So we see it in consumer durables, we're seeing it in health services, we're seeing it in manufacturing, health technology, energy, and that's going to be kind of the premise of this video. I want to kind of, I guess, inform you guys of not only the dangers in the market that's about to happen, but also some fine opportunities that you and I can actually produce a lot of incomes and a lot of, gains in the market, right? So we're getting a lot of defensive rotation in the market, meaning a lot of people are going risk off, going out of these risky assets like technology, finances, and going into the more stable growth companies like the health care systems and the health services and the consumer durables and the manufacturing. Those are the names that people try to go in when the market is starting to get a little bit of turbulence, and we can see that, right? And I kind of missed the energy names down here, the non-energy and energy. Those are looking pretty good, and even like distribution services. So these are some pretty good names that I'd probably start looking at. And as we go over some of our analysis, we'll kind of understand why. Okay, before we actually get into the charts, let's look at what's coming up ahead, right? So we do have earnings season coming up. We did have some earnings last week, but it wasn't really nothing for me to cover. But this week, I do think we kick off some pretty decent earnings, right? So we have some banks coming out: Citibank, Wells Fargo, Goldman Sachs. We also have Bank of America, Morgan Stanley, and we have TSM. TSM, that is your chips name. So this is going to set off, I guess, chips. And we should be looking at TSM, we should be looking at chips, and, obviously with TSM kind of kickstarting the earnings season for chips, I think this is going to be pretty important, a good precursor of what's to come. And one of my favorite names at the moment, United Health Group. You do have earnings this week on Thursday, and I will go more in depth with what I think with United Health Group. Next, let's go to our major economic news. So we have a lot of data this week, like way too much data in my opinion, but it's about to get pretty shaky in the market, right? So here, January 14th, we have about 5 different news events that I'd be watching. So obviously you got the PPI index, core PPI year over year. So I have the Fed Beige Book. These are gonna be pretty interesting. So basically before the market opens, I need you to be paying attention to our PPI numbers, see how producer price index is actually operating at the moment. And obviously the Beige Book might be some type of turbulence in the market, not turbulence, but something to look out for on 2 p.m. So while the markets are open. So if you see some type of shift at 2 p.m., you probably know why. Wednesday, we have consumer price index. That's a CPI. That's going to be your year over year and your core year over year. So that's going to be pretty important as well. So the last time we had a nasty CPI, which was in July, that kind of set off a big sell in the market. I'm not going to say that's going to happen this time around, but I wouldn't be surprised if something were to happen big in the market, because we do have CPI and PPI coming this week. And then on Thursday, we have initial jobless claims. It's going to be pretty important. Retail sales. So it's going to be a lot of data in terms of inflationary data that we should be watching. We're going to also see how jobs kind of correlate with that. So it's going to be like a lot of data. And then Friday, you actually close out with industrial production. That's going to be pretty important. I do think the industrial names are to watch. So industrial production, I do think that's going to be something to watch as well. So I want to go over my performance for the week. Now, if you guys haven't watched my last video, I kind of went over that I will be tracking all of my wins and losses, as well as my progress on my portfolios, on my long term, my swings, and even my fast aggressive trading accounts, right? Trying to go over all of this data and give you guys how my progression with how I'm working and how I'm doing everything. So I just want to go over this week. This week, I wasn't that aggressive. I know it says I've been, obviously trading a lot. Like this says 9 trades, 7. I wasn't that aggressive. I'm way more aggressive, but I was not that aggressive this week, only because obviously just setting things up. But I think that this week was a decent week. I made a return of $364. This was pretty cool. Obviously, I had a nice streak of Monday, Tuesday, and then Wednesday, obviously, I kind of slipped up here. I don't know what I did wrong on this day. Let's actually go over it. That's why we're doing this, right? Oh, coin. So basically, let's go over the wins first before I go over the losses. So here, I made $300 off a Tesla put that I opened. I closed it. I opened it on Monday, and I think I closed it on Tuesday. But here's what I made from it, and here's how I entered. Let's go ahead and go to the daily. It was a pretty interesting trade. End up trying to play the lower high test right here. So if we go ahead and make a line chart. So I had a line chart going on here. I announced this trade inside of my Discord. Shout out to the Discord. Hey, it's free 99. You guys could join completely free. Free 99. Join the Discord. The link is down below in the description. And yeah, accept it and join. Yeah. But yeah, I told everybody about this trade. This was one of my watches for the week. And yeah, it was a decent trade. It was a pretty good trade. Honestly, I left so much money on the table because even when I sold it, it kept selling. Man, it looked super good. But I end up buying it here at around, what was it, 425, end up selling around 400. So it was pretty cool. I took some money off the table. I could have, like I said, made way more, but obviously folded right here. Sometimes you gotta learn to take profit faster when the move is aggressive. I end up selling it when buyers start stepping in like a dummy, but it's okay. This was a decent short. I only got one contract in this. I wasn't too aggressive in it. It was a whatever trade. Like I said, this week I wasn't trying to get too aggressive because I was just setting everything up. And yeah, that was a decent trade for that week. And there's some more decent trades here. This was another trade. I shouted out in the chat. This was a really good short. So I ended up getting it. Okay, it was a day trade. So it was a day trade, pretty decent day trade. I ended up getting it here at the top. I found the top here at 245. I told my Discord about it as well, and we end up selling here on this gravestone doji. I could have held it, but I was like, nah. I should have, because my plan was to hold it because I knew it was gonna break structure and try to test 235. So 235 and 233 was actually my target, and it hit my target. So I could have made way more money, but this was a decent trade as well. Shouts out to Discord. Anyways, those were like my major trades for the week. I have some other slight winners, but obviously they were just some slight winners. My loser, let's go over that one. This is what kind of brought my weekly profits that I made. I would have made almost $1,000 for the week, but I end up not because of this trade. So basically, this was a bad trade. Looking back at it, and even though it was a bad trade, it was good that I took profit before it even got worse, right? So obviously it kept going a little bit more, but I took profit like pretty early. And what was the trade here? So obviously it was in a downtrend. Let me go ahead and obviously we're operating in a downtrend, but in my head, I honestly don't know. Let me see. So the reason why I bought it, okay. Oh, here's the reason why I bought it. So the reason why I bought it, because I thought it was going to operate in some type of inverse head and shoulders, kind of like this, right? and we're gonna get some type of curl action here, but we end up breaking my level of, I guess, like my stop loss, and my stop loss was somewhere under here. Was it 257, something like that, or 259? That was my stop, and it hit my stop, and I just got out. It ended up trending lower, so I'm glad I got out, because it would have been that would have been nasty right there. But it's okay. You know, sometimes you could try some things and it works, sometimes it doesn't, but you just gotta respect your stop. So my stop loss saved me. I had an Uber call that I played. That was just, you know, that was one of the plays that I had for the week, and it just didn't work out. I mean, sometimes it works, sometimes it doesn't. I'm not gonna go over this one. It's a whatever play. But that is my, I guess, trades for the week. So we're up $364 as realized profit, realized gains. So that's how we're gonna start off the year so far. Let me know what you guys think in the comments. Let me know if you guys want me to continue doing this. Obviously, this is just to track all my gains and my progress for the week, okay? Now, let's get back into the analysis. So now let's get into the charts. So we have the dollar and we have yields. Now, everyone's been talking about the dollar and everybody been talking about yields and saying this, that, and the third. The market's going to crash, that, and the third. Okay. Last week, I already told you guys what I thought about the yields. I don't think that the market is going to do this crazy crash. Actually, I think the opposite. I think you're going to get some type of bottoming effect in the markets. I don't know when, but the yields are going to kind of precurse that whenever we get that signal. I'm going to kind of go in depth in that signal after this analysis. But first, let's start with the dollar. The dollar, I do think that the dollar is making strides to this 109, 110 area. So you're already at 109, 109.6. But I do think after we break this 109.99 to get to 110, I think that's when you're going to get your major resistances on the dollar. So I do think you might start off pretty strong on the dollar into some type of selling, right? So you might get something like this where we boom, boom, and then break down, right? On this breakdown of the dollar is when I would start trying to buy equities, right? So if we actually try to break down on the dollar, so around like what, 110.8, 110.7, I would try to actually start looking at equities to buy, and I'll do that until we hit this support area. So our support that I'm targeting is going to be around 108.5. So let me go ahead and mark down on the chart so I can see it for later. It's going to be like this, so something like this. Yeah, some type of higher low on a dollar is what I'd be watching to find my support. And yeah, that's what I see for the more shorter term trend. But longer term trend, I do see that the dollar is going to keep climbing. Like I just see it's going to just keep on climbing until we get some type of coiling and a breakdown. So that's what I think is going to happen. Maybe we might go to all-time highs on the dollar. Who knows? Don't know. We don't know until it happens. So now yields, right? I like to track the yields. I don't know why people say you shouldn't track the yields in terms of charting it. I think if it is a data point, you should always chart a data point. So I always chart the yields, and it tells me some very interesting data, right? So just in case for new people that haven't watched my channel last week, basically I talked about how important yields are, right? And I'll kind of talk about it again. I might make a separate video about it, but I'm going to need like you guys to show me like interest. If you guys want to see a video on it, then I'll do it. But if not, no, I'm not going to do it. But anyways, look. I believe that the yield always precurse some type of sell in the market, right? So once we go to the NASDAQ, I could kind of prove it, right? Boom. This is October 2023. This is your top. This was our major resistances on the yields, and this was our major bottom on NASDAQ. Boom, right? So that marked our major top and bottom. Next, the very next one that we can see here happened in April 2024. That's when the bank crisis, not bank crisis, but the bank issue thing in Japan happened. I'm not going to go over all that stuff, but basically we had that major sell-off here, and boom, right? This was our major bottom in the market up until obviously what? This was like 8 months of straight upside, right? So this was our major bottom in the market, and this was our major top in the on the yields. Now, what I was watching was to see if we get some type of breakdown again, right? So in November, this was what I was watching. And as you can see here in November, kind of got that. We kind of got that breakdown here on the yields, but we end up getting some type of buy, like some type of crazy upwards pressure. So instead, that kind of made us instead of rocketing upwards, we just kind of went sideways, right? So this is what I'm watching. As we break out here, which is what we did on the bonds, I'm waiting for some type of major top, right? So maybe it might be up here at 5.3%. I'm looking for some major top that breaks us out of this upward channel. Once we break out of this upward channel, I do think we're going to find a major bottom on NASDAQ. And that's when I'll be a major buyer, right? And I do think that's going to actually happen pretty soon. And if I were to track this upwards trend, I think the most major resistance comes right here in this area. And the reason why I think that's going to be the major resistance, and obviously I'm not sure, we would have to see that. We would have to see confirmation. We would have to see it actually getting there. But the reason why I think so is because we had this multi-year trend line that we've been following up until 2024, and we broke out of it, right? Usually when you break out of a major trend line, you do some type of retestment. So once we broke down, now we're kind of getting a relief rally on bonds, and I'm looking for some type of retest. So some type of retest of this support line. And remember, when you break support, it acts as resistance. So I'm waiting for this support line right here, this yellow support line, to act as resistance. So if we get some type of move again like this, boop, 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 and then we sell down, I think that this will be our major top. So our major top, this would incorporate a major bottom in the markets here, and I would be looking for buys. So that's what I'm watching. Obviously, I could just be a tinfoil hat man, and if I am, then I am. It's cool, but that's what I'm watching, and I think that's what you guys should be watching as well. But here on the shorter term market, on the bonds, I do think that we're coming into some type of short resistance. So I would be looking at some equities, just, you know, obviously for some day trades towards the upside. So if I were to take my market tool, I think that some type of resistance here between 4.95 and obviously your 4.8, I do think that's going to be your major resistances for you to actually sell down to your support area. Your support area is going to be between 4.5 and I can guesstimate about 4.6. So that's what I'll be watching in the, I guess, shorter term bottom market. So let me know what you guys think in the comments down below if you guys enjoyed that little spiel. Okay, anyways, let's continue. Okay, now we're going to look at the indexes. Indexes are pretty interesting, and I think that you guys should really be paying attention to this spot, right? So I told you guys last week that we are operating in either a major rising wedge that we can either like find support and bounce up, but it's either we do that or we break down out of this rising wedge. And that's only because if you zoom out from the weekly chart into the daily, you see a descending triangle, as we can see right here. So remember, a descending triangle. So you know when you throw a rock into a pond and it just goes like this, boop, 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 and then it sinks? That's kind of what I see in the broader market. So we have some type of descending triangle. We keep on trying to test the support area, and it's actually pretty interesting because we found buyers every time we hit the support, but buyers are starting to shrink. We're starting to see sellers take control of this descending triangle, and I do think that we're going to break this week. Now, how we're going to break? Move like this, where we actually find a little bounce and we retest somewhere here. We might even get a fake breakout at 2150. No, 21,500 around there, or even some type of higher low here at 21,250 around here. So if we get some type of push and then breakdown, I guesstimate we're going to sell all the way down to this, what is it? This 2197 area. So 2197, that is what I'm looking for as a completion of this move. And honestly, that's like the shorter term completion. I do think that if we were to get a measured move, we can go ahead and get a price target here. Let's see. If we were to get a measured move of this range here and we bring it down to the breakout, I do think we have a potential of even testing 19,547. So 19,547. If we get some type of test, yeah, I do think that that can definitely happen. So our motion will be something like this: boom, 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 and pop. We might get a retest and a breakdown and some type of inverse head and shoulders and pop back up. I don't know. But I do think that this is something to set up, right? This is a very, very likely setup here, right? And you could kind of track your daily downtrend here with this daily line. Boom. So, yeah, this is kind of like the action that I'll be watching for next week. Obviously, we might not get the full reaction like this per se, but in terms of coming down and testing this area right here at what is it, 20,197. I hate reading numbers. 2197. I think we'll be testing that for sure. Absolutely. I do think that this is the target we'll be watching. Obviously, if we get some type of false rally into a breakdown, this is where I'll be watching This is where I'll be watching as a second buy, and that is at 19,500. So I like this. I like this a lot. I do think if you're a bull in the markets, which I am a bull in the market, I do think for the longer term trend, we're still bullish, and I don't think we are going down. I do think if we break down here, especially this week, if we break down this week, remember I said it, right? We have two lines of support, either right here or right here. Either way, if you buy here as an initial starting point, I would just buy the dip for the second one. I would do that. We might not even get that second dip. We might even just, continue to rip higher. Who knows? But I like that. I like the dip here at 20,197, which is roughly 20,200. I like it a lot. But our sell down will be looking at a quick 7% correction. And if you were to estimate it from December, you could say that's your about your 10% correction that people have been trying to price in. So I like it a lot. I don't know about y'all, but I like it. Next, very important. Let's go ahead and let me extend this a little bit. Let's look at the ES. I think the ES is pretty similar. Let's go ahead and drill down to the daily. I think it's similar. You're operating in something similar to the NASDAQ. Again, it's the same action. You have a descending triangle, pop, 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 boom. And now we're just looking for that relief rally into this underbelly move. So we'll get some type of resistance play here, some type of lower high, maybe between, 6,000 and 5980. So I'll be looking for a lower high here for a potential short. And hopefully we break down out of this descending triangle support line and come down to our first area of support. Our first area of support is 57.82. I like that as a buy. And you have your second one at right here, 57.42. And again, you could kind of use your price target here. If I were to measure the move, this would be it'll be roughly right here. This can possibly be a very nasty move, more nasty than the NASDAQ. But again, I would still be a buyer here. I'm not gonna lie to you. Even if you complete this measured move here, I mean, that's cool and all. Yeah, I could take that hit. But as a long-term buyer in terms of investing, I think that buying anywhere down here is pretty decent. Obviously, unless you hold underneath this upwards channel, then that means that we could be seeing a nastier sell in the future. Do I think that's going to happen? No, I don't, but it's very possible. We've seen some nasty sells before, and we just got to see how everything kind of develops. But for the most part, I do think that we're going to sell this week. I do think we're going to get a lot of sellers. We're going to get a lot of people over leveraging in the market and selling heavily. And it's going to be either a buy the dip, a huge buy the dip, or, maybe some continued selling. So just pay attention and make sure you guys are managing your risk reward. Next, we have the Russell and the Dow Jones. Personally, I like the Russell a lot. I think small caps are going to be the name of 2025. And the only way I could keep that thesis if we hold this 2160. If we hold this, then I could stay bullish. But if we break underneath, then I'm not too sure. Now, it's because you're operating in this fat ass box here, right? So this big rectangle box is your whole consolidation range from 2022 all the way up until breakout time, which was early this year, early last year, 2024. So now we're just retesting this box. So as long as we stay above our box area, which is at 2160, I think we're okay. I think we're shaping up to get some type of recovery and pop up. So I'm still watching the Russell. And yeah, I'm still watching it. We're just going to have to see how it develops. For the Dow Jones, I think that the Dow Jones presents one of the best opportunities in the market, right? And the reason why I kind of really like the Dow Jones is because you're just holding. As the market is selling, you're still holding this upwards channel, right? Yeah, we are getting more of a sell than the rest of the market, but we're holding it in terms of our price action in the long term a little bit better. I like it. So we're just sitting in the support area and we're testing the 200 moving average, right? The 200 moving average sits around 42,000, and right now we're at 42,213. So I kind of like it. Personally, I like it. So if buyers can just hold you above 42,200, I think you look really, really good. And even if we drill down to the daily chart, I like it. Even if you come a little bit lower, let me go ahead and take out my marker. Even if you come a little bit lower and get a false breakdown here at 41.87, I do think we would have some type of curl back up. This is a major uptrend, and I like it. The Dow Jones has been a very interesting market to watch, and I'm looking at names like Lockheed Martin and just all the industrial names, because even industrial sector looks pretty good. So I'm gonna obviously drill down into industrial section, but I like it a lot. So if we hold, I think we can actually get some type of major breakout. Next, let's go over tech. I do think that the tech sector is pretty interesting, right? So here in our weekly chart of our big tech chart, and remember, this chart is a compilation of all the big tech names, all 8 of them. So you have the Tesla, the Netflix, Apple, blah, 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 all the big tech names. You see it here. Now, you're operating in this bull flag consolidation. And even though you're in this resistance channel where I'd expect us to do something like this and break down and try to get some type of support here to come back up, I don't know. I don't think that is going to happen. I mean, it can happen, but we might even just set up to break out of this upwards trend and create a new parabolic uptrend. And I know that sounds crazy, but if you really look at the structure of this looks like a bull flag. Like this right here is a classic bull flag here on your big tech chart. So I'm not too sure. I'm honestly not too sure if we're going to actually break down. Now, I can call a bull flag if we break up out of this channel. So that means this week we would have to break up above 3,200. If we break above 3,200, I do think that's a bull flag, and I'll be the first to let you know that, listen, we are bullish, right? And we should be obviously positioning ourselves for all-time highs and even extending above that. But if we get some type of rejection instead, so if we get some type of rejection here at 3150, then I do think we can actually set up to go lower. And if we set up to go lower and we break this area of support, which is at 2950, 2960, we break that, then I do think, scratch the bull flag, we are going lower. That means that we're going to try to test this 2800 area. And 2800, I'm a buyer here. I like between 2800 and your previous all-time high here at 2700. So I like that. Now, when we look at the XOK, I've been telling you guys the XOK has a monthly consolidation in which we broke out, right? So we broke out right here in December, November, and we were super bullish. Now, even though we broke out, we end up selling down. Our breakdown looks like a higher low. So I like that. A higher low here looks really good. And I am not bearish in the XOK. So that means the tech SPY sector, I'm not bearish until we break down, right? We would have to break down underneath 223. So if we could stay above 223, I think we're fine. I think we're perfectly fine. So as long as we find buyers in this little area here, I think we're good. So we're actually testing this demand area between, what is it? This 227 area. So between 227 and 223, I'm a buyer. I am a buyer here. So names like Apple, Microsoft, I am pretty much still bullish in these names. I wouldn't short it as of yet. Unless we get a breakdown, I don't think we should be shorting those tech names. I don't even think we should be shorting tech right now, honestly. Yeah, we got that major breakdown, and I told you last week that we should be shorting tech. Okay, this week, I'm not too sure, honestly. I think we can get some names to break down on the tech names. Cool, because I do think QQQ is setting up to break temporarily, but to actually position yourself for long shorts, yeah, buddy, I don't think so. Now for QQQ, I'm gonna full screen QQQ because I think QQQ is pretty interesting. I'm not gonna lie. So here, I already told you guys last week that we are operating in a rising wedge, and our rising wedge formation usually ends up in a sell, right? So we end up selling. We broke back up. Let me go ahead and zoom in so you can see it on a daily. So we end up breaking back up and retesting our rising wedge, and we failed it. So this was a major sell. If you caught that, amazing. That's a great place to be a seller. I was a seller there as well. So boom, right? We end up selling and coming down to our support area. Right here, I am super bullish. I am super bullish anywhere in this area. I do think we have a little bit more room to break down because the NASDAQ told us. And if we actually do break down here, I'm still a buyer anywhere between, anywhere between 503 and 497. I am still a buyer here. And honestly, due to the weekly chart and how everything looks, we have room, honestly, let me see, to like 589. So we could potentially sell down all the way to 489 and I'll still be a buyer. I am still bullish on tech and I'm still bullish on the NASDAQ. I do think that we're just setting up to just sell right now, just temporarily, but for the longer term, we look really, really good. Let me know what you guys think down below in the comments, and yeah, just let me know. Now I kind of want to just go over the cash markets because I don't really go over like the SPY. I usually go over the ES because it gives you a broader range. So I'm gonna kind of go over it here, and a little bit of the QQQ, which I kind of already went over it, but whatever. I like it a lot. Again, I think that we're operating in some type of descending triangle. So boom, boom, boom. So I do think we might catch a bounce. If we catch a bounce anywhere between this area, what is it? Anywhere between 593 and 590, I am a seller. If we see some type of weakness there, I do think we can sell all the way lower and break down to our first buy zone. Our first buy zone lies between 575 and 570. I am a buyer. Our secondary buy zone, so if we get another lower high or whatever, our second buy zone is here at 565, 560. So I'll be watching these two buy zones like a hawk. Put that down in your charts. These are very important areas, and yeah, we should be watching this. Again, I kind of already went over the QQQ buy zones, so they're here. If you guys want to mark them down, the first one is between 503 and 496. The next one potentially can be around 486 area. So let's go over chips. Now, I told you guys that chips was a very interesting chart last week. I told you guys I personally wasn't going to play it, and I didn't. And the reason why is because it's hard to tell what's going to happen. All we can really do is see if we're going to break out or not. Now, this week gave me some clues where I think we are kind of more bullish than bearish. I think a lot of people are still bearish on chips, rightfully so, but I think I can convince you to change your mindset, right? So the only way to kind of explain it is by going to the monthly chart a little bit, right? So what made us so bearish on the monthly chart, we got these monthly lower highs. So we had this high here, a lower high, lower high, lower high, and we just kept making lower highs. Now, this month of January, we actually broke that trend. We broke that lower high that we had here in October 24, and now we are just coming down and retesting our area of interest, and that's kind of your close of last month. So your close of last month at 243, you're holding that. That means you're expanding in the market. That doesn't mean that you're contracting. You're setting up to diverge and go down. That means that you're expanding technically. Right? So I think a lot of retail traders are getting trapped. I think they're getting trapped. I think that even on the weekly chart, you can see us holding right? So we're holding above this candle, our previous candle. Remember, last week I told you this is going to be our breakout. It's either we break out or we break down. This is going to be our telling signal. And right now, it looks like that we're going to try to set up to break out. So if we get some type of hold above, I would say like either above this key area at 240, and maybe honestly you could even say this key area at 235. As long as we hold above this area here, I could see us keep on like coiling to break out. This looks pretty good in my humble opinion. This looks pretty good. I think Chips is setting up to break out. So let me know what you guys think in the comment section below. A lot of people are getting bearish on these names, and I think when people get bearish, too bearish, I think that's when the market loves to, you know, give you a reality check. Now, I could kind of support this evidence even with the XSD. That is the semiconductor ETF for the SPY. Listen, guys, you already broke out of this downtrend, right? You retested it. You came up, and now you're trying to retest again, right? You're trying to retest this 243. I kind of like this area as a buy. If we can hold this area, hold above 243, that kind of supports my thesis. Because, I mean, you are trending up higher on the weekly. And obviously on the SOXX, you are looking like you're trying to set up to go lower. But because you're holding this area here, you're holding between, 210 and 218. I like this. I like this hold. Kind of similar to the SMH. You're holding above your previous week, and you just made another higher high, right? So I like this. I like the higher high, higher low setup. I like this. I like this a lot. So I do think that you can potentially break out on the semiconductor names. Let me know what you guys think. Maybe you'll set up some type of W here. Who knows? Let me know what you guys think down below in the comments. But I'm starting to like it a lot, and I'll keep tracking it and let you guys know what I am gonna do. So to kind of wrap up, I want to go over names and sectors that I'm watching for the week. For the sector, I'm gonna let you know right now, I'm liking XLE a lot. I'm liking the energy sector. Right now, you're operating in a multi-month ascending triangle. So that's kind of like boom, 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 and you break out. That's similar to the descending triangle that's operating in the SPY and the QQQ right now. And I think that if we actually break out, look, if you break out of this range here, I do think you can have a major return in gains, right? So if I take out this fib, let's go ahead and take it out. I think that we can actually try to target this 122 area. I think that would be a target that I'll be watching. So I kind of do like XLE a lot. Obviously, I have to keep watching how it develops. Next, I like the healthcare section, right? The healthcare section looks really good. You're operating in this multi-month. You're operating in a multi-month uptrend here, and you are on the support area of it. And obviously, all we need to see is buyers. Now we are seeing an uptick in volume as we are heading in this demand area here. So I like it a lot personally. I think our target will be 147. XLP, you had this nasty rejection here. I am looking to see if we get some type of, I want to see what happens here. Maybe we get some type of expansion signal here. So if we get some type of downward expansion, I do think that we can get some nasty sells on XLP. So we're just gonna have to keep watching that. The next section I'd watch a lot is the XLI section. XLI looks really good. That is your industrial names. Industrial is coming to your major support area, kind of like what I've been saying earlier in the initial part of the video. I do think industrial names is something that we should be watching. We should be watching industrial names. We should be watching the Dow Jones. We should be watching these names. So I like it a lot. And this is going to kind of segue into the names that I'm watching for the week. The actual equities that I'm watching for the week are going to be United Health Groups and Lockheed Martin. Lockheed Martin, I do think you're coming down to a major buy area. My major buy area lies right here at 480. Not to mention, you do have earnings coming up at the end of the month at, January 28th. So mark that on your calendars. Again, I like this as a buy a lot, right? So if we come in, this is a multi-month uptrend. No, sorry, a multi-year uptrend since 2019. We've been, every time we hit this area, hit this demand area, it was always a major buy. So I do think that Lockheed Martin is going to be a major buy here. So obviously 440 is what I'm watching as my area to buy. Next is the UNH right here. I'm going to go full screen because I love it that much. I think UNH is one of the names to watch for the week. You do have earnings coming up on Thursday. Let me see. Is it on Thursday? Yes, you have earnings coming up on Thursday. And I'm loving it right here, right? Even if we come down to 500, I do think it's still bullish. We're operating in a multi-year channel, just like Lockheed Martin. And we've been consolidating in this range since 2022. So we've just been consolidating. So if we actually get some type of breakout, ooh, yeah. I would love a breakout to 700. Obviously, that's in the longer term. But I've been buying shares on this name. So let me know what you guys think down below in the comments. I'll be playing earnings and I'll see how it goes. Hopefully it works out. I don't usually play earnings, but when it comes down to evidence, when I have evidence that something might happen, then I don't mind it. But I like this as an earnings play for Thursday.